This article is coming from Yahoo Finance by way of Bloomberg. Li Auto seen winner of China EV race with 107% gain. Now I can tell you I learned a lot about Li from reading this one article, and I see why its price, when we look at the charts in a minute, are inversely correlated to Neo, Xpeng, Rivian, Nikola, you name it. Nevertheless, let's get into it. Shares of Chinese EV maker Li Auto have more than doubled from last year's lows and are tipped for further gains even as a slowing economy and price war hamper its rivals. The automaker unexpectedly reported profits for the past 2 quarters. Citibank analyst predicts the firm's shares will continue to rise, roughly another 100% by the end of the year, while Morgan Stanley raises its price target by more than 40% this month. Li Auto has outpaced its peers by introducing a new model in each quarter since the middle of last year, a much faster pace than competitors such as Xpeng and Neo. The revamped product lineup helped revenue surge almost 100% last quarter. Deliveries jumped to a record 52,000 cars. So here's where things get interesting. A price war is heating up in the Chinese EV industry as the cost of batteries fall from last year's highs. Tesla and BYD have both announced plans to cut vehicle prices, effectively squeezing industry margins. We've seen this with Tesla, right? They lowered their car prices, squeezing margins. Price pretty much fell from 200 to 150-ish before rebounding. The price wars are mainly in the mass market segment, so this is key. But Li Auto is selling cars far above that range, so it looks like it's selling luxury type cars versus your middle class car. Unlike its rivals, here's another key piece. Li Auto has focused on designing and manufacturing extended range electric car vehicles that use gasoline engines to add to the distance possible for their EVs. So it's kind of like the Prius Toyota, like the hybrid car. However, the company is expected to introduce its first purely EV vehicle later this year to complement existing hybrid cars. An analyst at Morgan Stanley wrote the company deserves more credit for its well-rounded strategy and quality execution. I wish I would have known this months ago. The stock has already left the stations, so to speak. All right, so if we go to the monthly chart, we're going to have one end zone at 40, the other end zone at 15. All right, this must be a price target at $32 price target after it broke out. Probably on earnings, it was range bound. Okay, we'll get into it. Let's go to the weekly chart. You can see since price breached the weekly downtrend line, it's pretty much been somewhat off to the races, right? All right, so here's where things get interesting. Okay, you see a gap here. That had to be on earnings. Before then, price was sideways for the better half of this year. Let's go to the daily chart. Yeah, so you can see it was sideways for a while, and yes, price broke out on earnings on May 10th. And why did I pick 32 as a target? Maybe because that's where price stopped several occasions. Yeah. 1, 2, 3, 4, 5, 6. Okay, 7. Right. All right. So it was about $1 away before pulling back. Not sure what happened today. I mean, the markets were bullish based on the jobs report. So I'm not sure. Not sure what happened here. Light Auto News. May EV deliveries rebound in China thanks to Light Auto stocks fall anyway. Yeah, I'm not quite sure. Maybe it was a buy the rumor, sell the news type of event, right? I mean, you had this nice run up since earnings, so that's the only thing I could think of. Nevertheless, I have new respect for Li Auto. Worth keeping on your radar. If we zoom out on the weekly chart, potentially price is basing again before the next leg higher. Can it get to 40? Well, it keeps producing profitable quarters. We'll be at 40 in no time. Thanks for watching. Subscribe. Please like the video.